And just like that, we are back in the high fives on the Brent Bruce Daily 30-year fixed conventional home loan. We're going to take a look and see why that is here in just a moment. Today is January the 6th, 2023. It is now 1:57 p.m. Central Time. So today is another one of those days where a report comes out, the market doesn't like it very much, digests the information, looks further into it, and all of a sudden totally changes their attitude, and we have a great run. The mortgage-backed security was down, not having a very good day earlier when this report first came out. But as it's been read, we have been jumping up and now are having a great day. Home loan interest rates are tremendously improving. And here we are. So let's take a quick look here. Look at the mortgage-backed security. We're up 75 basis points, a day that we definitely needed. Why is that happening? Okay, so we jump over here to the front page of CNBC, and we had a new report come out on employment. Okay, so employment is something we don't talk about enough. This shows where the jobs are for December. Non-farm payrolls rose 223,000 in December as strong jobs markets top expectations. Okay, now first off, you see that report and you say, well, I thought the Federal Reserve didn't want to see a great job sector. They want to see that the market is shrinking because they're trying to squeeze the market. If they see jobs being created, then that means that businesses are doing well and they're willing to spend more money and hire more people. Well, that's not what they want to see. That would be considered inflationary. But here's the thing. This is a jobs report for December. Okay, so as you would expect, what happens in December? Seasonal hiring. Okay, so most of these jobs, these creations that were above expectations were part-time. And here's what mattered even more. The more that you look at this report, it also talks about increases in wages. So were wages higher? Now, maybe you have more jobs, but were wages higher? And it shows that wages increased at a slower pace than they had been increasing. So again, it's not that they weren't increased at all. It's just that they were increased at a slower pace, which means that it's slowing. And that is also shows that inflation is slowing, because wage-based inflation is the second half of what creates inflation spiral. It's important that you know what inflation spiral is. Now, that is something that you can learn more about. I did a video on this about 8 months ago on inflation spiral. I'll put a link down below so you can watch that if you want to find out more about that. But the report showed that inflation, that wage-based inflation was not as high as it had been previously, and the markets are loving that. So let's go back and take another look and see where we are at our home loan interest rates as well as the charts for the day. Well, now we're up 70. We still have a couple of hours left in the trading day for bonds, so we'll have to see where the day ends. But take a look at this. Let me come over here, get out of your way. Let's look at the chart here and check out how the gains of today. Look, we opened up, broke down here below this 100-day or 50-day moving average. We went through 1, 2, 3, 4 ceilings. What a great day to break through 4 ceilings of resistance. And now we are trading in this range. And really, hopefully, maybe we'll start trying to bang on this ceiling that is over us right now, which is a Fibonacci level at 101.671. Look at the 10-year Treasury really following suit, having a great day from our perspective. Again, we want the yield on the 10-year Treasury to go down because that allows home loan interest rates to go down. We know that it usually floats about 2% above the 10-year Treasury. It isn't right now. Go back and watch my full video that I put out 2 days ago about the projections for 2023, and you'll learn more about that. So this is another good day. So how is this rolling over to our Brent Bruce daily interest rates? So let's jump over here, pull this up. Again, this is a very well-qualified 30-year fixed conventional home loan with 25% down and 800 FICO score, single-family residence, basically just the perfect client. All right. So we had said yesterday that we were about 6.49 and just had a little bit of a credit. We were kind of fighting to hold on to that 6.49 interest rate. We are now at 6.125. So we've had really about a 0.3% drop with just today's report. We have a little bit of a credit, but a minute ago I mentioned the fives, right? So let's open this up and take a look and see what we've got going on. Okay, so 5.999 is going to cost you $356. So for any client that I'm going to be talking to about a conventional home loan that is well qualified today, we're going to be talking about 5.999 back in the fives. Okay, that is a great thing to see. Now, again, we always want to take a quick look here at our scenario that we're taking a look at. That's what we've got going on here. All right, so here's the thing that you need to understand and you need to pay attention to. This is one report, guys. We got one report to me that was just not even a big report that we pay that much attention to usually, that shows inflation subsiding, and we dropped 0.3% in a day. We still have the CPI, the PPE, we have the CPI, the PCE, the PPI, and the coming Federal Reserve announcement in the next 30 days. All those reports are coming out in the next 30 days. And I believe that all four are going to be helpful to us, that all four are going to play in our favor, allowing home loan interest rates to improve greatly over the next 30 days. Hopefully, we'll be talking about mid fives, maybe even lower if these reports come out with the numbers that I had projected. So make sure that you do go back and watch the video that I put out on my projections for 2023. If you also want to take a look at the video that I'm going to post down below about inflation spiral, today is really showing the effects of the opposite of inflation spiral, which is showing that the wage-based inflation was slowing, which is what we want. Make sure that you take a look at those reports. Let me know what you think. Make sure that you like, subscribe, and share. Share this with anybody else that may be able to benefit from it. I will talk to you again on Monday.